you wondering how to make higher education more affordable, perhaps even tax-free, for your children or yourself? Navigating the world of college savings can feel overwhelming, but there is a powerful tool designed to help you prepare. A 529 plan offers a fantastic way to save for education, and understanding what counts as a qualified expense is key to unlocking its full benefits. Simply put, qualified expenses are specific educational costs that you can pay for using your 529 plan funds completely tax-free. These are the costs that the Internal Revenue Service permits, allowing your savings to grow and be withdrawn without federal income tax. The core reason these expenses are qualified stems from federal tax law, which aims to encourage saving for education. The types of expenses considered qualified are broad, covering almost everything needed to attend an eligible educational institution. This includes tuition and fees, which are the most common costs. Beyond that, it covers expenses for books, supplies, and equipment required for enrollment or attendance. For students attending at least half-time, room and board also count, though there are limits based on the cost of attendance set by the institution or the actual amount charged if living on campus. Even the purchase of a computer, peripheral equipment, computer software, or internet access that is used primarily for the student's education can be included. Additionally, a 529 plan can now cover up to $10,000 per year per beneficiary for tuition expenses at a public, private, or religious elementary or secondary school. To ensure your expenses qualify, the most important step is to keep clear, accurate records of all educational expenditures. Always verify that the institution your student attends is eligible. Generally, any college, university, vocational school, or other post-secondary educational institution eligible to participate in a student aid program administered by the Department of Education under the Higher Education Act of 1965 is included. For room and board, if your student lives off campus, make sure the amount you claim does not exceed the allowance for room and board determined by the school for federal financial aid purposes. This detail is often found on the school's financial aid website. An interesting nuance is that, if you have funds remaining in a 529 plan and the beneficiary decides not to pursue further education or has funds left over, you are not necessarily stuck. You can change the beneficiary to another eligible family member without tax consequences, or you can even roll over up to $35,000 in a 529 account to a Roth individual retirement account for the beneficiary, subject to certain conditions. However, withdrawing funds for non-qualified expenses will result in federal income tax on the earnings portion, plus a 10% federal tax penalty, so planning is essential. Ultimately, strategically using a 529 plan for qualified educational expenses allows you to leverage powerful tax advantages, turning potential tax burdens into more resources for learning. By understanding what expenses are covered, you can confidently navigate college savings, making education more accessible and financially manageable for your family.